Good afternoon, everyone, and welcome to today's live. I think this is live number 4 in launching Legacy Month. And for those of you that haven't been catching the live, just to give you a bit of a recap. So this month, it's a good as month as any to be launching into a new season. September is a great month to launch. We've launched our new website. We've launched our Launch to Exit service. And so we really just wanted to reintroduce you to the brand, introduce you to some partners, our clients, reintroduce you to our brand story so you can get a real feel for who we are, what we do, and the type of organizations that we work with. So today I am absolutely honored to have Iain McCoo. Please correct me if I've actually pronounced your surname wrong, Iain, and Paul Dodgshon with me. So before I introduce them properly, I really just want to give you some context for today's live. And the topic is how to increase the value of your business, because so often we can be providing more value to our business, but simultaneously almost decreasing the value of the business because the business is too dependent on us. So how do you increase the value of your business? So regardless of whether or not you're ready to sell, when you are ready to sell, your business is valuable. And so, I'm really pleased that Paul and Iain are partners of ours. They are experts in selling businesses. And so I really wanted you to hear their expertise on how you do that. But before we get into the meat of this session, I just want you both to introduce yourselves. So Iain, please tell me a little bit about yourself, your story, and what got you to this point and what you actually do now.
Okay, great to be here, Katrina. Yes, well, my background is basically a CFO for more years than I'd care to wish to state, but at least 20 plus years in investment banking, pensions platform sector as well, latterly, dealing with acquisitions, disposals over the years as well, and decided that, as a next step, it made sense to join business partnership and bring those skill sets to the table so that business owners can benefit from that. And navigate the choppy waters, shall we say, of exiting their businesses.
Thank you, Iain. Thank you. And Paul, yourself?
My background, Katrina, and thank you for hosting today, is 15 years as a banker, dealing with retail and commercial. I think I was in the first ever paperless office in Midland Bank, as it was then. That shows you my age. But I'm now fully cured. I went to work for a client. We did that for 10 years, high growth business. I think we hit 10 million inside turnover inside the first 4 years.
Wow.
And after I tried to do an MBO through that and that didn't work, I went to find and buy my own business. And I found Trips Across Business Partnership. Tried to buy a couple of businesses off them. We couldn't agree terms, but that didn't mean that they hadn't understood the business and they weren't offering a professional and honest service.
Yeah.
And at that point, I decided that I would join them. And that was some 17 years ago.
Wow. And so, I was reading up on the company, and so it's 30 years of experience within the company, isn't it, within this space? So when we say you are experts, you are actually experts, and we can tell from your background. And I think so often that missing piece of, having that financial insight. My coach this week challenged me to tell my story from my profit and loss, and getting me in the habit of actually doing that. But it seems that when you're so busy building the business, you're not thinking of that side. And so sometimes you need people to actually come in and say, no, yes, you've been making money. Yes, you're doing well. But actually, this business isn't sellable, because if you look at your profit and loss and your balance sheet and actually how you're making money, if you were to leave tomorrow, or there's gaps in your financial story and things like that. And so it's so important that people like you bring in your expertise. And so even while we have our businesses, you're preparing us and you're helping us actually increase the value to the
our
business.
job is to be an advocate for our clients. And sometimes, like any defense lawyer, you have to start off with the weaknesses of their case. And then, how can we mitigate those weaknesses? How can we build upon the strengths? And then how do we take that to market and advocate for our clients? to find the best buyer to buy their business, and that's the job that we do.
And often we'll get into as we get further into the conversations, but it's the difference between an owner working in the business and working on their business.
Yeah,
there's a very distinct difference on that.
Yeah,
there is. So, why is it important that business owners work on increasing the value of the business long before they want to sell?
Do you want to start, Iain?
Well, yeah, what I'd say is basically, to the point of working in the business, you are probably focusing on an income flow. You're probably focusing on the fact that you are the key person in the business success itself. So really, that success is fine, but it doesn't build value in the business itself. It builds an income stream. So it's important to start focusing on this at a very early part of the process to build value. Think about exit strategy, to think about what you need in place to ensure that people who acquire will find your business attractive and pay and optimize value for yourself as you exit.
Yeah. So for people that might be listening, go ahead, Paul.
Yeah, I think the important thing here is that any business owner understands that actually only 1 in 5 businesses that's on the market sells.
Wow.
Yeah, it's a very low amount because they haven't made themselves investable, as Iain has said, but they haven't worked on their business. And that those that do, only 5% of owners are happy with the deal they did. Again, because they've left the door open for a buyer to perceive risk, to not see opportunity, and therefore they will devalue the business. And the sad truth is that the average business sells for 71% less than a business that's properly prepared for sale. Wow. So not only do you increase the chances of your sale if you work on your exit strategy, you'll increase, or you can significantly enhance what you get when you do so.
Wow. So for those that may be wondering, what is exit strategy exactly? How would you describe exit strategy?
Shall I have a quick go at it? Exit strategy is basically looking at your business from the perspective of putting in place a plan that will overcome the areas of concern that you have at the moment or areas where you can improve.
Okay.
It's getting ahead of the game. It's starting to put a plan in place that could be a 12, depending on the maturity of the business. It could be 12 months, it could be 3 years, or even, you find that the business is ready now. But if the sooner you start, the more chance you have of having a successful exit plan.
I think the other key point here is that most owners I meet haven't actually sat down and thought about what they need. They're so focused on what the value of their business is. And well, they're there, and that's what the value of the business is, and they have to accept it. Where actually it might be more than enough, or it might not be enough to do what they want to do. And the key thing here is the business has to deliver for the owner the exit that they need. Yeah, not what the perceived value of the business is, it's what they need. And until they actually set that milestone, they can't then start to do all the stuff Iain's talking about building the business to make sure it delivers what they need, because they don't know what the target is. As I say, Iain said, they might already be there, but they didn't realize it. And therefore, to continue running the business, they're running a risk, because you never know when the next pandemic might hit, or the next Brexit might hit, or the next war might hit. Business is unpredictable, and business owners who always try and exit and say, well, when's the best time in the market to exit, will be chasing themselves for a long time, because nobody will ever predict that. Yeah.
So
and usually you find, sorry, Katrina, that as part of their wealth portfolio, shall we say, business owners' wealth portfolio, the business probably has the most value. But unfortunately, history tells us that they spend the least amount of time thinking about how they can exit the business at optimal value.
Yeah.
So really, it's balancing that act. It's very important.
And I think one of the big things that I'm hearing is that you really have to take emotion out of it. You really have to look at this cold, because in terms of, people buying your business, they don't care about your passion, your emotional attachment. They're looking at the facts. and the financials. And so what is someone that's looking to buy a business? What things are they looking for that people don't realize? What are those components that they expect to see in a healthy business that they buy?
Any buyer is buying the future.
Oh,
yeah.
Yeah.
So whilst and it's like stock market, past history is no indication of future performance. So they will look at the accounts and look at the history and understand where the business is, but they want to understand its foundations, how solid that is, what sort of marketing plan is in place, how much does the business rely upon the owner, so when they get rid of the owner, because presumably at some stage he wishes to leave the business, that business will continue. So it's this risks and potential thing. You've got to remove the risk. So the buyer can buy with confidence, and that increases value. If you show them actually the future is much brighter and you're on a growth curve like this or even higher, then actually you'll get more value, because the buyer will factor that in if you can prove that you've already been doing it for 2 or 3 years.
Right.
So
And
show them the future looks brighter would be my main tip.
Okay, so show them the future looks brighter. And so typically, is there like a typical age that you can start thinking about selling? The buyers want to see a certain amount of years of traction before they would consider buying?
Well, I'd say that the longer, the business has been operating and effectively has proof of its sort of past performance, but to Paul's point, more importantly, to a certain degree, the future, the better that will be. There's not I wouldn't say there's an actual age, because there's generally 3 events that precipitate a desire to exit a business. And that can happen. Some of those events can happen earlier in life or later in life. As an example, if it's a retirement sale, obviously you would expect the owner to be thinking about it prior to retirement, and that might mean 50, 55 years of age, etc. However, there might be an event that you can't look at in a crystal ball happens, and there may be a need to divest as a result of that. And then thirdly, of course, you get the entrepreneur that is very much loves building and gets bored quickly, so wants to move on to the next adventure. So it really does depend on what the rationale is. It doesn't really fit an age bracket. It fits more events and desires.
Right. And Paul, I just want to touch on something you said. You said the owner has to work out what they need. And how does an owner work out what they need?
Well, principally they should employ or go and see their IFA, preferably one who's a wealth manager. Wealth managers can do lovely things called cash flow plans, where they'll look at what your existing pension is, your existing assets outside the business, and they'll also ask you questions about, are you going to live in Scunthorpe or Barbados? Do you want the yacht or the pedalo? What's your ambitions for your retirement? And then they can hang a number on that. Based upon average returns and this, that, and the other. And it just gives you that focus. The one bit they can't unravel is the value of the business. It's like the black hole. And they've got to come to somebody like us who can actually sit down and give an objective valuation of where the business sits. Once we do that, we know the total value of the bucket today, and we know what it's got to increase by to achieve their magic number. And we might find they can get to their magic number quicker, than they originally thought. It might be a mixture of, we can never make the business valuable enough, so we've got to work on cash extraction in the meantime. So understanding their number with the help from their IFA or their wealth manager, we come and plug in. The one bit I would advocate any owner to be careful of, however, is using an average industry multiple to value their business. If they go to their most accountants, and I'm sorry if I'm denigrating the accounting industry there, but they will generally, the ones I come across, they'll use 3.5, or they might actually be able to get an average industry multiple because they've got a bit of knowledge. The issue with that is I've never met a business owner who thought his business was average.
Right.
An average is an average, and are you top quartile or bottom quartile? And you only will find that out when you bring it to market, or you come and see somebody like us who can actually tell you, well, actually, you're not going to achieve average industry value. So that lovely valuation based on what the market says you're worth, you're not going to achieve, or actually, because of where you are, you're already there and you might be able to get out sooner than you thought. So it's a mixture of an IFO and a valuation specialist, but somebody who looks at how you run your business, not just what the market says.
Yeah. And I think there's before we move on to the value builder, which is a great tool, I think there's something to note here. I think as business owners, there's so much kind of fluff in the entrepreneurial space sometimes, and you have to position yourself to hear the truth, because you have to be ready to hear the truth. And I think sometimes that's why owners don't prepare to exit, because if you go to someone like you, if you go to a proper financial advisor and wealth manager, they're going to give you the cold hard truth. And sometimes we like sitting in that bubble and convincing ourselves that facts, things up the fairy tale is facts, and it isn't. And so even though it may not always be easy to hear, if you've worked in this business for years and years and you think it's fantastic and brilliant and you're gonna sell it and you're gonna earn lots of money, and then you have someone like yourselves, or actually it may well be worth all of that money, but actually maybe it's not, and you can do some stuff. We have to be able to hear that and actually take action, because people like yourselves have been doing this for a long time. And when you hear things like only 5% of businesses sell, when you hear things like most businesses don't sell for the valuations and things like that, it's sobering. But actually, when we hear things like this, and we come to people like you, and you are prepared for this, and this is why we're having these lives and why I'm working with people like you, because if you can prepare way in advance, people think exiting and launching are two separate things. They're sides of the same coin. And so when we say launching legacy, we're thinking about this stuff at the very beginning when you launch, to make sure that you're building value in.
I think the key there is exactly, if you're launching a business, you should be looking at what your business model is. How do you engage customers? Can you create recurring revenue? Are you selling a product or a service, or is it a productized service? How do you set your business up? Because they all have different values in the market. A business that sells one-off product sales will have a much lesser value than one that sells a product and with recurring revenue, and then sells another one and another one and another one. So they're constantly building turnover, rather than this one hit, got to go and find another customer, there's another hit, then I've got to go and find another customer. That's an expensive way of doing business.
It is.
And therefore this is what buyers look for.
And I do think as well, it's very important that post launch that you benchmark regularly to have a gap analysis between reality and your desire, because that will dictate to you what your next steps should be if you want to get the desirable outcome. Knowing what your reality is now and the value of your business as it stands now, and you can work on that and give yourself time as well.
Absolutely. Know the end from the beginning. Know what you're shooting for and what it is you're aiming for. I think that business isn't just about passion and enjoyment and doing what you love. Actually, we're all trying to retire well and retire wealthy. Well, at least I am, and most business owners are, I think. So actually, that doesn't just happen by accident. We absolutely have to prepare for success.
But the same applies whatever exit you're aiming for, really. And some owners will want to set it up. They'll be happy with what they've done, and some owners want to pass it, say, on to the employees, or will do an MBO. It doesn't need to be an open market sale, but even in those sales, you still need to set the business up right.
Exactly.
And it's still got to be investable when you come to sell. Otherwise, you'll be lending the money to the Employee Ownership Trust, the EOT. To fund it, because they can't go and raise money on the business. The MBO team, the management buyout team, needs to be able to raise money on the business, so that you can be paid. So whatever your goal, making your business investable gives you the ultimate choice. You can either pass it down to family, you can sell it to an MBO team, sell it to employees, sit back and be chairman. And enjoy the income as a passive income for the rest of your life. It's just, if you do it properly, there's no reason you can't be the next investor, or you can't help new owners into the company.
I love that.
That's up your legacy.
I love that. It is about choice, and it is about legacy. And I know some people might be thinking, well, I'm not even thinking about selling. but the rules still apply for all the reasons that you've just said. The rules still apply. So that's great. So let's talk about the value builder, Paul, because I love this tool. So what is it and how does it work?
Okay. Well, Value Builder is something that was set up in Canada by a chap called John Warrilow. And he built and sold 4 businesses, and he started to notice similarities between the processes and the questions he was asked. And therefore, he took that along with his knowledge of market research, which was his background and the businesses he built. And he's built a tool that, through a series of questions, allows us to benchmark a business against its peers.
Yeah.
So the reason I got involved with it was very simply, I was pitching what I thought were realistic valuations, and I'm convinced they were. And other people were pitching much higher valuations. And I needed a way to explain to my prospects why I thought I was right, and in a format that they could understand.
Right.
So what we do is they answer some questions, and they're questions that I've been asked by buyers at some point or other in every business sale I've done. Yeah. So I know they're relevant questions. And what the Value Builder system does is it takes how you've answered those questions, what your business looks like, and the offers received against similar businesses. So if you've scored 59, what is a business in your industry that scores 59 sold for? Yeah. And it starts to plummet together like that. So we often can give much more realistic and market related valuations than either relying on average industry value, because they say, are you average or not? But if you've built a highly successful recurring revenue business with great cash flows, phenomenal growth rate, you're going to be worth more than the average in that industry. Yeah. And we have to take those characteristics into account. So it manages the industry against how you run your business, how investable it is, as Iain said before, to come up with, well, you're here, you could be here. Yeah. And the average difference is 71%. And that's the bit that most owners are leaving on the table when they come to market. Okay.
So what do you both do? So as what do you call yourselves? Exit strategist? What is your type? What do you call yourselves? First of all?
Well, I call myself a business broker. It doesn't need to be any fancies than that. Okay. The service I offer is I will help an owner understand where they are, where they could be, and help them get to that point of where they need to be. And if they're ready to sell, we'll sell them. If not, we'll guide them through the process of increasing value until they get to that point. And that's basically.
I think that as well with focuses, and Paul's exactly right, is exit strategy and helping to be able to build value for the owner is a critical part of that. And the broking side of the business broker, shall we say, is technically at the end when you sell the business and you help them along that journey, which has its own pitfalls and needs guidance, etc. But it's that planning that exit strategy, because as I think Paul mentioned earlier, is giving the advice and your view on the business can mean a number of things. It can be, this is what you need to do to improve. It's fine. It looks like you've got it right. But the advice will always involve, is it the right time to sell?
Right.
Because, an owner phoning you up as a business broker, the first thing probably on their mind is, I'd like to sell the business, but it might not be the right time. And that's where we would come. We're happy to turn around and say, actually, we don't think you're ready to sell the business.
Yeah, absolutely. Yeah. Go ahead, Paul. Were you going to say something?
Yeah. No, it comes back to that. Only 5% of owners are happy with what they achieved when they sold their business, because 95% of them didn't think about what they wanted to achieve. They didn't have that. This is what I need. They're just chasing this maximum I can get, and then the terms don't come in as well as they thought they were. Rather than having, that's my goal. If I get up here, fantastic. But I know that's my minimum, and I've got that. I'm satisfied because that's what I aimed to go for.
Absolutely.
And that's the position we try and help them understand.
Absolutely.
Correct. And also it goes a bit further,
That's okay. Go ahead, Iain.
Just to go a little bit further, is it also, Value Builder also helps to look at what the profile of the individual is, just not financially, but what do they want to get out of it as well, which goes to the 5% of happiness as well, is have you really thought about what you want to do when you put the reins down? Most people are, 20 hours a day in the business. Maybe that's a bit of an exaggeration, but you've spent your life growing this business. It's emotional, it's passionate, you're passionate about it. Now you're giving up those reins. And you could say that you want to play golf or you want to travel the world, etc., but actually you don't find out what you really want to a certain degree unless you think about it very carefully until you've actually sold the business. And that does not help the happiness factor, shall we say, if you haven't thought that through properly.
You tend to be happier when you've been pulled out of the business towards a new goal than when you've been pushed out by expectations that it's time to retire or ill health or anything like that. Yeah. So that's the other side of the exit strategy, as Iain says. It's very important.
Yeah, really, really important. And I think you touched on something that lends itself to how we all work together moving forward. So, for example, if you go to, I may recommend you to Paul or Iain if you feel that you want to sell the business because they are the exits and they are the experts in that space. But they may say to you, based on Value Builder or their assessment, actually you're not quite ready to sell, in which case you would maybe come back to work with me for a period of time. And then when you are ready, go back to Paul and Iain, who are the experienced brokers. So if you're wondering how our partnership tandems, how we work together, that's how it works. And so, like I said to you, this is an intrinsic part of launching. So my job is to always be thinking about how we increasing the value of the business, even if you never want to sell for 10, 15 years from now, because that's what launching legacy means to us. So that when you are ready, it lends itself to the future that you want, the legacy that you want for you and your family. And that's core to our ethos. And it's one of the reasons why I'm so excited about working with Paul and Iain and the other side of things, because I'll always bring you experts. I'm never going to do something for you that I'm not equipped to do. And so this part, you need it, but it's not our specialism, which is why, we bring the experts to you, and we have a catalogue of partners like Paul and Iain because we want you to have the best. So that's brilliant. So what are the steps, would you say? No, before we go to that, can you explain to us, well, you've explained a bit of the service you provide, but can you just go through the steps of that process and how people can work with you?
Yeah, sure. Basically, our first step is usually prescore, which is this personal readiness for exit. What are the owner's goals? What are they going to do next? Get them thinking about their employees and the legacy, and actually how they're going to feel when they're divorced from their business. It is like a marital divorce. It's a big thing in your life. The next day it cannot be. And do you want to make that all in one go, or are you looking for a gradual separation? So just get that straight. And that includes them thinking about their number and their time scale and what they're going to do next in life. And after that, we ask them to take a Value Builder score. As part of that process, we will review the accounts and do all those sort of numbery crunchy things that you would expect us to do to understand the balance sheet, the cash flows, all of that. And once they do that, then we will take them through what their current value is and ways that they can increase their value, where the shortfalls are. If they then turn around to us and say, well, will you help me get there? Yeah, we can do a bit of work to say, these are the gaps you've got to go and work on. This is a shortfall in perhaps your marketing position that Katrina can help you with. This is actually, you need to think about your cash flow. Can we improve cash flows in any way? That's a bit to work on. Or is it actually we just need to show more growth potential in the business? How are we driving that? How do we measure it? What's the marketing plan look like? And things like, have you got standard operating procedures? What is the new buyer going to look at the day after you're gone and go, this doesn't seem to be working right. What should we be doing?
I love that. And that's exactly why our fifth P is processes, because so often businesses don't have them. And I feel like, honestly, if you don't have processes, you actually don't know what you're doing in your business. You literally don't know what you're doing in your business, because everyone gets a different level of service. Processes are fundamental for the running of your business, but absolutely when it comes time to sell as well. So.
Exactly. And, building that resilience, it's not a P, but it's an R. A resilience in the business is incredibly important because, number one, it's going to make your life while you're in the business as an owner a lot easier. It allows you to step away, go on that golf afternoon or that holiday, and not spend 24/7 on the emails, etc., trying to sort out problems and troubleshooting, as well as providing a buyer with that comfort that you've thought it through, you have an operational manual, you have processes and procedures in place, and that you're a more mature business than maybe others in the market at that time.
Absolutely. Absolutely. Well, this has been so useful. I've learned a thing or two from you both as well. It was really good to actually hear about a bit more about your backgrounds and your journey to this point. But, you know, if you are thinking of selling, definitely Iain and Paul are the people to speak to. So what I also want to do, I want to also offer one person that watches this live after the replay a consultation, a complimentary consultation with the three of us. So if that's you, either drop your name in the comments, even if you're catching the replay, or direct message me and I will pick a name out of the hat. But regardless of that, if you would like to contact Paul or Iain, what is the web address and what are your details, please, Paul and Iain, for the viewers?
After you, Iain.
So contact details, email address is ian.mccoo@businesspartnership.com. Mobile, if you'd like that, 07590 477 811. You can call me at any time. Anything else in the details required?
Do you have a web address?
Oh, yes, it's probably the same for both of us in the first instance, but www.business-partnership.com.
Yeah.
Yep.
Excellent. And Paul?
Absolutely the same web address, and it's paul.dodgshon with an H in the middle there, DODGSHON at business-partnership.com. Catch me on LinkedIn. If you spell my surname right, there aren't many of me about, so you will find me. So drop me an email or phone me 07875 173 104 as well.
Excellent. And also, we've launched a new website and we're in the process of adding what we're calling our Legacy Builders directory, where you can search our partners, search people that we highly recommend. And so Paul and Iain will be in the Legacy Builders directory. I'm currently populating that. But do go ahead and look at the new website as well at thelaunchstrategist.com, thelaunchstrategist.com. See a bit more about what we do, how we help, and why we work with amazing business people like Iain and Paul. So thank you all for watching and joining us live, whether you're catching the replay. I hope you found this beneficial and it gives you food for thought. So regardless of whether you think you want to sell, you're getting ready to sell, this is something that you really, really need to think about. It's literally, I feel like, the difference between business owners that retire well and those that don't. It's a really important piece of the puzzle. So definitely do consider these things that we have spoken about. Thank you so much, Iain and Paul. I look forward to working with you. So yeah.
Me too. Okay.
Great.
Thank you.
Great.
Thanks a million. Cheers.
Bye.
Bye-bye.